Welcome to this week's update on the hedged option portfolio. Since last week's update, it's been a bit of a dull week from a trading point of view. The Bitcoin price is just ranging, and both realised and implied volatility have been very low. If we look at DVOL, the Deribit Implied Volatility Index, it looks like vol is holding up nicely, but DVOL looks at 30-day volatility, which is currently being boosted by the US election, which is 2 weeks away. I'm mostly selling expiries of less than a week, and this doesn't yet include the election day, and it's the front end where the implied volatility has dipped the most. This can be seen on this chart from Amber Data, which shows the term structure. The next few days are very low, around 30, then there's a big spike up for the election week, which has forward vol of over 70, and then anything past that is pretty flat in the mid-50s. The vol in the much longer dates, like June and September next year, has actually come down quite a bit recently, and is now well under 60. I will start using this dip in the longer dates to slowly add to my protection positions. Specifically, I will start adding some positions in the September expiry to go along with the ones I already have in June. As we get closer to the election, I'll start selling some of that elevated election vol, and I will use those higher credits to fund some of those new positions in September. You can see the account equity is sitting at roughly the same as it was last week, and these are the current positions. I don't have too much to do today because I already have short positions for the 27th, and the volatility in these expiries is very low, so I don't really want to add too much to these expiries. I'm short 2 puts, and I rolled the call out to the 1st of November. So not a whole lot to do here. Just wait for these few positions to expire and then add some more, the usual stuff. Basically, I'm waiting until we get closer to election week now, so I can sell some of the higher volatility that's there. You might have noticed in some previous videos that I also had some other currencies in this account, but I've now moved those to a second account, and I'm going to use that second account for highlighting some altcoin options and for the new cross-collateral system. I've gone to that second account now here. You can see I've got 10 Solana and just over 2,000 USDC. I'm also holding a Solana option position, I believe, which I moved over from the other account. I'm short a strangle in the November expiry, and it's currently up a little bit. I did cover altcoin options in a previous video, and I made a comment that the spreads were quite wide back then. They have got much better recently. If we go into the dailies, you can see the spreads are normally 10 to 20 cents on the Solana options, which is pretty good. If we look at the election expiry, it's similar. We're looking at about 20 cents for most of these spreads, 10 on some of them. So this is much more tradable than it was a few months ago. Much tighter spreads, which means you can do things like call spreads, put spreads. You could even do multi-leg positions like iron condors and stuff. I wouldn't personally do things like iron condors still, just because iron condors take up a lot of fees. Even when the spreads are tighter, you're still paying more in fees. I prefer to do short strangles and just control my risk by doing smaller position sizes. At the moment, there's still not very long dates on the alts, so I can't do the strategy that I'm using in the other account where I just hedge by purchasing much longer dated options. I can't do that with the altcoin options because the longer dates don't exist yet. They will eventually. Liquidity is improving on these shorter dates, so as it does, longer dates I'm sure will be added. But for now, I control my risk on these positions by controlling my position size. So I showed you I've got a short strangle here, but this position is very manageable for this account. I'm short 1 put at the 120 strike, but I have enough funds in USDC to cover even if that went to 0. And the same on the upside. I do have 10 SOL in the account, so if the price rallied a lot, it's covered. It's essentially a covered call. So in future videos, I'll do some more altcoin trades, and I'll use this account to highlight some of the differences with using the cross-collateral system. This one is set to cross-portfolio margin, as you can see up here. To change your margin system, you can just go to the margin page, then click change margin, and then you've got the selection here. It's a good idea to double check you're sure how each of these works before switching to it, and you can test that on the testnet, which is quite useful. That's it for today's video though. Thanks for watching, and I'll see you next time.